Here we are on the Euro Yen 5 range, and it's a flag pattern, what I believe to be a two-touch flag pattern that I've just got involved. And I want to tell you why I've got involved on the 5 range and playing for an extension here up to the 129 flat. To do that, what I need to do is remove off this information and take you through the higher time frame analysis. Now, my overall bias on this currency pair is bullish, and I just want to talk you through why that is. So if we look here on the dailies, what we did is we've been down and tested this VS1 level. We've come up, we retested this level here, which was just below the 130s. We had a rejection, we came up a little, and now we've made a new low. So here on the daily time frame, I'm looking at the market coming lower, and in actual fact next week, possibly the week after, it's looking like we could have a very large why is my delete not working, a very large flag pattern setting up here. And it looks something like this. Just let me go to the 240, might be able to see it better. Okay, but right now what has happened here is that we came down on the 240, we double bottomed, we came up for a 2618, went higher, and now what we've just done is violate structure. And so what we're seeing is a little retracement back up into potentially this little shelf here, and this wick has come up and tested the 130 flat. So again, no real direction on the trend, nothing that I'm happy to go ahead and trade, but as I drop down the lower time frames, I can see that we violate structure to the downside. I can see that we have just put in a higher close candle after violating this structure, and so I could look at this and say that we have the potential just to come up to retest these candles here. So just a small move up to the 129 flat. So as I dropped down the time on the chart down to the 15-minute, this is what I see. And this major rally here followed by nothing but just this sideways movement like this. Okay. On the 15-minute, this is not a pattern. However, this type of formation typically breaks up to the upside, even though this is not a flag pattern. And so if I go down to the 5 range and look to see if there is a flag pattern here, I can clearly see that we have some nice harmonic movement within the channel. Now, because we've had such a bullish run up to this, I would only be looking for this to be a two-touch flag, and I'd be looking for the 127 extension for targets. And whenever I look at targets, I will also look at where structure comes in at. And so let's put this fib back on. We just want to leave the 127 on there, and you've probably noticed already it comes 3 pips underneath that 129 flat, that big psychological number. And if I put a structure level on there, you can see it comes in at the closes of those candles. So we have a brilliant place for targets, we've got an entry reason, and the next thing we want to look at is our stop placement. I should have really done stop placement first, but in this instance I didn't do it that way. So stop placement, well, I believe this is only going to be a two-touch flag. The reason for that is we've had a very high momentum move. We've already hit 2 touches, and we haven't come into 382. So just this kind of setup here just indicates to me this is probably a two-touch flag. If it isn't, and we do come down for a 3rd touch, like we could possibly could be doing right now, well then guess what, if we come down for that 3rd touch, my stop is still in an appropriate place. However, I don't stop there. My stop is in more than an appropriate place, because if we have a fake break or a long wick test candle, guess what, my stop is right down here out of harm's way. So if I do get stopped out, it's likely that this trade is going to lose. and I can do this because I have a very nice risk to reward, and every time I take a trade I base each trade on its merits and its risk to reward. So if I get a trade that's say 3-to-1 risk to reward, if I can move my stop further back behind a psychological number, a piece of structure, I will do that, and I will take a worse risk to reward, knowing that I have a higher probability of the trade winning. And so let me just go ahead and colour this thing in green for our targets. Oh, stop doing that, come on. Green, okay. So what are we risking? Around 16 pips for 41. So about 2.5-to-1 risk to reward there. I've got my stop. If you look here at, if I put a structure level on right there, look at the structure level that we have here, okay, it is not a bad place to have my stop underneath. So we'll come back to this trade and see what happens with it. And here we are on the euro yen, and my alarm's just been triggered, and we're now rallying up to targets, and this trade has happened quite quickly. This type of two-touch flag typically does break out quite strong. I showed you on the 15-minute time frame the style, and I know just from the way that that looks that typically we do see a heavy breakout there. And so we've actually come now within a few pips of my target, so what I'm just going to do is go ahead and move this to a few pips past break even and just simply wait for this target to be hit. I'm hoping that we can see this spike up and hit during this this video. 1 pip away now from targets. 1 pip again. There we go. Targets hit for 41 pips. A very easy and pain-free trade.